Hello and welcome to another update video about AGIX. AGIX, one of the AI coins, has been in a long correction now, which already started here sort of around the 26th of December, possibly ended a month later on the 24th of January. It's a coin I haven't covered for a while because it's been so boring really and unreliable as well. But the support area so far that we defined also in the previous video, which was well known, has not been broken to the downside, so support did hold well. Let's talk about the structure and then we talk about the next targets, and let's talk about the bullish as well as bearish scenarios. So first of all, it's a bullish market, which is why I highlighted to you in previous videos that I'm leaning towards bullish scenarios until support levels break. That's pretty much generally the case in the crypto market. Of course, there are some charts which are really bad, really low quality, so just be aware of that. But this one is, it is not the best quality, I have to say that, but it's one that I'm tracking that many people ask for, and where we can identify at least some structures, because the move down, into the October lows, I count that as a wave 4. How come? Well, the initial move up was only a 3-wave move, so it's quite easy to explain that. So wave 1 up, wave 2 down, that was in November 22, an impulse up, which is a 3rd wave, 5 waves up in wave 3. Wave 4 was quite deep, but never broke the 50% fib level. Few people ask me, is this not a 1-2? I cannot count a 1-2 there. There's one wave missing, which could be this one, and then we have 5 waves up. The thing is, I've got a wave 1, yes, I've got a wave 2, I've got a 3rd wave, but no 4-5. This has to be wave 4. That's why I highlighted it's very deep. But the 50% Fibonacci level is acceptable for a 4th wave. So that's why we talked in previous videos about, as long as the 15.77 cent level is holding, we can still, let's say, lean towards the bullish case, or at least, focus on it, or, at least consider it, At least consider the bullish case, which, however, requires that the market is holding the 50% fib level. We haven't had a break below it. It's quite amazing, actually. The market turned exactly at that 50% fib level. And that's normally the maximum that we consider for such a 4th wave, right? So therefore, we're now watching for a potential 5th wave to the upside, but only as long as the 15.77 cent level is holding. So the next problem we've got on this chart is that the rally from that low was only in 3 waves. It was only in 3 waves. So in the bullish scenario, it would have to be an ABC structure of a wave 1 of an ending diagonal. That's good because it's acceptable to have corrective structures within a wave 1 in an ending diagonal. And it all adds up because the thesis is that in the bullish case, this here is a 5th wave to the upside, and a 5th wave can be an ending diagonal and so on. It's just not the best setup to trade. Normally we're looking for impulses. Or 1-2 setups. This was a 1-2 setup, it still is, but we've now obviously reversed out of the trend reversal zone here, and the price is showing some upside. But that's what the setup was. It's technically, if we dip into the area again, as long as it's holding the 18.9 cent level, this is a reasonable assumption that is following the white count. Below the 18.9 cent level, which is sort of the last reliable support for a wave 2 pullback, we might start to lean towards the bearish case. I'm going to talk about that in a minute, but as long as we hold above that, I'm giving it the benefit of the doubt. It's not a strong leaning, however, because, as I said, we're dealing with ABC structures, unreliable. But yeah, if we now see a break above the last high, which is at 36.9 cents, then we have confirmation as good as it gets that the 3rd wave is unfolding of wave 5. 3rd wave should minimally reach 67.8 cents, better 76.5. Then we should still get a 4 and a 5. And that wave 5 might reach nearly $1, roughly, from what I can see right now. That might still change. But yeah, these are the parameters to watch for the bullish scenario. Bearish one, I've marked it with a question mark. Take the subwave count out. But yeah, we've got 5 waves down. That's the problem. We've got 5 waves down from the 3rd wave high. That's why the bearish count definitely deserves consideration. 5 waves down, 3 waves up, not good. In the bullish case, I'm counting the 5 waves down as a WXYXZ pattern, Very rare pattern, a bit like a unicorn. Don't normally see it. And therefore, it's not, therefore, if I had to give probabilities, maybe it's just a 60-40 in favor of the bullish case, all right? So that's because of 5 waves down, 3 waves up. But as I said, as long as we're holding above support, for me, the indications that we're in a bullish scenario, they still outweigh the bearish ones. And therefore, I'm leaning. It would be different had the price dipped even just slightly below the 50% fib level here in October, yeah? So, and had we maybe gone down a little lower in the orange box, maybe even breaking below 18.9 cents, I would be leaning more bearish. And that can still happen, especially with a chart like that, which is moving in diagonals. I definitely reserve the right to change my primary perspective easily, and when it's needed, when the market tells me to. Okay, that's my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.